A new study out by IBM Business Services suggests that in the future, investable assets across the globe will double by the year 2015 to almost $300 trillion. Well, for more on what that means, we are joined by one of the authors of that report, Suzanne Dents from IBM Global Business Services, and Suzanne joins us from Singapore today. So a timely study of sorts because someone argued that because of globalization, markets across the world are falling today, or for the past 2 weeks, thanks to the U.S. subprime loan issues, which should be contained.
Yes, and absolutely, we are seeing the butterfly effect, and the butterfly in the United States certainly flapping its wings, having ripple effects throughout the worldwide economy. However, our study is based on a long-run analysis. We actually looked out through year 2025 and found that the size of investable assets will double to nearly $300 trillion US dollars and will quintuple to a staggeringly high $700 trillion US dollars by 2025. Just to put that into relative perspective, what are we talking about? That is nearly double the growth rate of worldwide GDP. So we do believe in the long run that the markets will shape up, and this presents an incredible opportunity for financial markets organizations.
Well, Suzanne, that's a lot of money, $300 trillion by the year 2015. Where is this money going to come from?
Yeah, interestingly, if you look at the total growth rate, so what contributes to that $300 trillion number and even the $700 trillion number through year 2025, it's coming from the wealthy population within the emerging economies. So 60% of total growth is coming from the developing economies in order to bump up that number. And the opportunity is large and will actually be found in several unusual places. So BRIC was a term coined by Goldman Sachs, and that was a term used to identify all of the opportunities that exist across the industries. And we found that we're actually bearish on Brazil, bullish on Russia, India, China, and other emerging economies such as South Korea, Mexico, Poland, Turkey, and Indonesia as well.
Okay, Suzanne, well, let's fit this study into the global market, but what exactly does it mean for your study for the, the world economy?
Yeah, well, good news in that financial markets is one of the most important industries contributing to total worldwide aggregate GDP. So the fact that there are these opportunities, as long as the industry can take advantage of these opportunities, and that's where we start to get a little bit nervous, because the good news is that there are opportunities. The bad news, however, is that 9 out of 10 firms told us that they are unprepared. Now, where it starts to get downright ugly is if you look at how the industry is responding today based on increasing levels of globalization. They're hurrying over to China for growth, and they're hurrying over to India to save money. Now, we ask the question, is that really the best way to take advantage of globalization? So there's a lot more work in order for this to provide an opportunity to contribute to worldwide GDP growth.
Well, Suzanne, is it the right strategy to take advantage of the globalization?
Yeah, we think absolutely. And, you know, this industry is driven, rightly so, in its ability to deliver shareholder value. And in order to do that, firms must overcome anxiety on 3 levels. Number 1 is they don't know which markets to enter, with which products, and when, with what given level of risk. 2, interestingly and somewhat disturbingly, they don't know what their clients are willing to pay for. Out of 12 categories, when asked the clients, what will you pay for? And we asked the firms, what do you think your clients will pay for? They only got it right 3 times out of 12 categories. So anxiety on that level. And also just with respect to organizational designs, 2/3 rank themselves as moderate to poor in terms of global operating capabilities.
I mean, Suzanne, there are also cultural barriers as well in terms of companies going totally global because there are language differences and, again, financial systems in different countries operate differently.
Absolutely, absolutely. And culture, we didn't realize the importance of culture when we started this study. And it may seem obvious when you're writing a research study on globalization, but culture was cited as the #1 barrier to profiting from globalization and also the #1 enabler to profiting from globalization. Because all of this requires change. And I can quote an academic, we love this quote. He said, "Change only happens one funeral at a time." A bit of a pessimistic quote, however, we are optimistic. We are optimistic that we believe that this industry will manage to do what it's always done so well in the past, which is to embrace change so that we don't have to wait for the next retirement to profit from globalization.
Oh, that's some gloomy words there. But Susanna, this is interesting to me. What I saw in your survey is that executives are now looking, or in the future as well, looking for more specialization rather than specialization in terms of getting their financial services.
Yes, which is interesting because we're living in a world where we see it in the news every day, a bit of a merger mania where the mentality is that, bigger is better. However, we're taking the contrarian point of view. Our study's title, Get Global, Get Specialized, or Get Out. And we think that that's the key to success, is to specialize in figuring out, and this sounds very obvious, but we don't see the industry doing this today, but what do you want to do as an organization, be really good at and go after? Second question, much more difficult, what do you not want to do anymore as an organization in order to strengthen as an organization? And then last, specializing around what the clients will actually pay you for.
Okay, Suzanne, on that note, thank you so much for your time today. Suzanne Dens, IBM Global Business Services.